this week's Market Insights. Whether you're a returning viewer or you're joining us for the first time, be sure to hit that subscribe button and ring the bell to stay ahead of what's going on in the Bitcoin price action. Let's dive straight into the reaction. Well, Bitcoin sits at a current fair value of 42,402. This is an impressive price, compared to where we were, let's say, a few months from now. Now, over the weekend, we've witnessed an accumulation phase, and this accumulation phase was from the notable dip down all the way from 49,023 down to around 42,000, where we currently stand. Now, Bitcoin seems to be consolidating at this range, and it's prompted loads of questions at the moment, and I'm sure a lot of traders are thinking, and you yourself may be thinking, well, has the major downtrend begun? Is there room for any more upside? Are the hopes of the early bull market done? Or will there be another rally up? Well, today we're going to be exploring some of those questions and assessing whether there are any more upside potential, and we're going to unravel some of the mysteries as to what Bitcoin is currently doing at the moment, and seeing whether there are any recent developments that we can take advantage of. But before we do that, let's take a sneak peek into some of my recent trades. As I always say, preparation is the cornerstone for success as a trader. So let's dissect some of the trades I took and see exactly why I was able to enter those trades. So over the last week or so, I've been in two major trades. One is the range counter trend setup from all the way up here, and the second is the inter-range demand zone setup, which I took last night. Let's take a look at each one of them and see exactly why I was able to enter the trade and what clues were left behind. Well, first of all, for the range counter trade setup, well, where is our range? Well, our range starts from here, has a range low over there, and it continues all the way around here. So this price action here, this section is what I classify as my range. And what has happened and what can I observe? Well, I can see that we've set a range high, we've come down, we've wicked that range high, we've come down again, and we have wicked that range high again for the third time. This has given me an idea that Trinity Model 1 may be in play, which is obviously based off of Wyckoff. But why exactly did I enter that trade? What were the things I looked out for? Well, first of all, I could see on this uptrend, as I mentioned last week, was that the breaks of structure, they haven't been as convincing as usual. Here we've got a 3% break of structure. Here we've got another 3 to 4% break in structure. Now this is nothing compared to what we're used to seeing. Over here, if we look at our break of structure from this high all the way to the next, well, we've got a break of structure of around 20%. So that upside moved about 20%. Well, let's think about it. 20% compared to 3 or 4 or even 5%, we can see clearly that the momentum has started to decline. So first thing is I observed the unimpressive 4-hour break of structure. Now, what else did I pay attention to? Well, clearly I can see this buy rejection wicks. I've got wick number 1, wick number 2, wick number 3, and these are all advances of buyers that have been rejected down by sellers, showing that there is some selling pressure all the way up here. Now, what else did I look out for? Well, also I can see here clearly we've got all these stop losses from these buy orders that are unengineered, and these stop losses obviously create momentum for the downside. What else did I see? Well, on a 4-hour, we can see this clear as day bearish divergence. As price went up, momentum went down, and this is a clear indication that there is about to be a change in market structure. All right, so now I've seen all these things and I've observed all these things as price action unraveled. Did I just click the sell button? Of course not. So what I did is I went to the smaller time frame and I said, well, why don't I investigate what price does as I approach that high from my range? We've got the first range high, it came down, we set another high, and we've got a third high here. So as price approached this third high, what did I do? Well, what I did is I went down to my smaller time frame, the 12-minute time frame. You could use the 10-minute time frame, and I just wanted to get an idea of what the structure was doing. And this is what the structure was doing. We had a clear uptrend of higher highs and higher lows. All right. So using this structure, we could tell that we could enter our trade if we get a break-in structure, a bearish break-in structure from around here. So I can mark this out as my potential area for a bearish break-in structure. We can call that potentially the 15-minute break-in structure, or P-BOSS, a potential 15-minute break-in structure. Now, I could have waited for price to mark down and I could have entered on that break. If I did so, my entry would have been around here, and that would have still left us with a nice juicy trade. But I actually got a cleaner, more clinical trade because I went down to my 5-minute structure and I looked to observe for the same thing to see whether there are any change in market structure on the 5 minutes. So in other words, I investigated this leg and I said, well, this leg we've got our uptrend and we can see clearly looks like this. We've got a last high, a low, and this obviously is that wick, that thing that looks like a wick on the 4-hour. I can show you that on the 4-hour, what looks like a wick on the 4-hour, is, 5-minute market structure. This wick on the 4-hour is 5-minute market structure. So what we're going to do is we're going to go back, to our 5-minute structure and just observe it to see exactly what has transpired. So we've gone from printing higher highs and higher lows, and we set the top and we mark up to the top, and then we have a change in direction. And that change in direction causes a break in market structure. Where is that break in structure? That break in structure is around there. All right. So what we're going to do now is we're going to label that as our break-in structure. Well, it's not a potential break-in structure anymore. It's an actual break-in structure. All right, so we're going to edit that from a P-BOSS and minus the P, and it just becomes a break-in structure. We're going to make that orange as well, just to keep it nice and consistent. So that was where I was able to enter that short. Now, some traders would choose to enter the short just at that break. All right. At that break. But is that what I did? No, that's not what I did. So what I did is I let the price mark down and I said to myself, well, I know there is a bearish change in direction, okay, but how can I enter this trade? What do I expect after a break in structure? After a break in structure, we all know, well, for those of you that follow this channel, you all know we're expecting a retracement. We're expecting price to mark back up and continue down. Well, some traders would have taken this as their retracement, other traders would have let it ride and noticed that we have a nice supply zone that was formed here. Now, this supply zone creates a position, or POI, area of interest, for our trade, our retracement moving forward. So what's happened? Well, price has continued to go down, and then price is marked up, and it's marked up nicely into our supply zone, and it's broken down further. And that's exactly where I entered that trade. Okay, so let's see how well that trade did, and let's see what would have been good about that trade. Well, we can see after that entry there, price marks down, it played around, and we can see that immediately we were in profit. Now at this point, as soon as I got to this level, I would have moved my stop loss to entry. What is that? I would have de-risked my trade. I would have made sure that for this trade, I'm playing with house money. Okay, so de-risk that trade, take a huge chunk of your profit, and if we see price continue to mark down all the way down here. Okay, so why was this a good trade? Well, for this trade, we can see that our stop loss would have been just above that high. Conventionally, you should have actually put your stop loss all the way up there. However, I'm looking to have this trade idea invalidated if that supply failed. So my stop loss was there, and I was able to ride this trade all the way down. And we're looking at a 9.5 risk to reward. So you would have made about 9.5% on your account now, which is a pretty good earning for one trade. So price marks down, we can get rid of that now, and we can see that as price continued to mark down, we had leg number 1 on the way down. I'll get rid of this, and I'll get rid of that, get rid of all of this, just to tidy the chart up a bit. So we had leg number 1 on the way down, we had a retracement, okay, and we had leg number 2 all the way down. We can see that leg number 1, we can see that came at about, a 6% drop. And we can see that leg number 2 comes at around a 4% drop. So what does this tell me? This tells me that even though we've had quite a fierce move downwards, the momentum down is slowing down. And how was I able to enter trade number 2? So trade number 2, as we said, trade number 2 was an inter-range demand zone setup. So it's inter-range demand zone setup. So where was our range? If we play price, we can see that we've formed a range low. And this range low, we can see that it set a range high. Okay, we can see that for a while over the weekend, price sort of flirted in this narrow range, creating another range. So what I was able to do, what I'm going to do is show you this range, but I'm going to show you this in, let's say blue. Price created another range by forming a range low and a range high, and it flirted around that range. Don't forget, this is a smaller range within the larger range that we're looking at. So we can see price continued, but this is a good point to stop. So at this level, what can I observe? What have we seen and why did I enter, this trade? Well, the clear thing you needed to pay attention, as to what price has done so far is price had left a supply zone, but not just an ordinary supply zone. It was a supply zone that was confluent with a point of control as well as the 38% Fibonacci level. And let's see what I mean by that. Well, if we take our range tool and we take our range from the high, to the low, we can see that our point of control is coming at exactly that level, right? And if we zoom out, if we take our fib tool and we draw our fib from the low all the way to the high, and we make sure that we're looking at the correct fib, we can see, well, that's not the correct fib. Let's try fib 2. Yes, we can see that that 38% level is also coming at around that region. So let's get rid of that for now. All right, what else did price do on its way down? Well, price also left a 10-minute supply zone. You can see we have a 10-minute order block around here, okay? We have a 10-minute order block as well as this 24-minute order block. So these are traces, these are footsteps that price is leaving behind as we create that range low, okay? And why is this important? This is important because we're going to look at this in the next section when we talk about our trade analysis for the week. This is important because these zones are potential reaction points. So looking at this trade, this internal range demand zone setup, why was I able to get into it? Well, I can see we've got supply up above, we've got a decrease in momentum as price, marks down. We can see lots of inefficiency over here. We can also see inefficiency over here where you've got fair value gaps in between these candles and fair value gaps in between those candles, right? So we can look now and say, okay, well, within this range, where is price, feasible? Where's price looking to react from? Are there any zones over here in this wick? Well, let's investigate. To check whether there are any zones, what we're going to do is we're going to narrow down close to those zones, that wick, and we're going to look at, let's look at a 5 minutes. There's nothing on the 5. Let's look at a 3 minute. There's nothing on the 3. Well, let's look at the 1 minute. Usually I refrain from using the 1 minute. However, in this instance, it was quite useful. So on the 1 minute, we can see that we have a zone over here. On the 1 minute over here, and we can draw that out to make it clear. We can see we have a 1 minute zone over there. So we're going to mark this out and put 1 minute. That's quite a low time frame zone. Now I wouldn't usually use a 1 minute, but it's all we had over there. And we can also see we have another 1 minute zone over here, okay? Now again, usually I wouldn't use a 1 minute zone, but that's all we had to go off of for this trade, all right? So we can see that within our range, we have those zones over there. So I'm going to get rid of this replay now. I'm going to look at the range again. And we're going to investigate what happened as price flirted in that range. So let's take a quick look. Well, where are we? So we are around here, right? So if we go back up to the 10 minutes, just to get a view of what's going on, we can see here that, price flirted within our range. And we can also see, if we get rid of this, is we can see, that we broke out of that internal range We broke out of that internal range and price marked down. Some of you would have noticed this symmetrical triangle that was brewing up over here. Some of you would have noticed this symmetrical triangle that broke down. Well, we broke out of that triangle and we wicked from this level. Now, that level we wicked from is an interesting level. Why is that an interesting level? Well, let's see. Well, that was exactly our 1 minute demand zone that it wicked from. And not only did it wick from that level, it wicked from that level with a very long-tailed, a very long-tailed sell rejection wick, which shows that there's lots of buying pressure over here because the sellers have been rejected. Okay, so now let's see. Some people would have entered a trade over there, off just a limit order, but I wouldn't recommend that because there is no clear indication to enter that trade. So what did I do? Well, I waited, and we had another markdown. And where did that markdown come from? Well, you guessed it. Again, the 1 minute zone underneath. Okay, so again, we wick from that 1 minute zone and we have that pressure, that buying pressure. So what's this telling me? This is telling me that in this region within our range, there is lots of buying pressure. That, these levels are being protected. Of course, we have this low over here, that potentially could be tagged to our range low, but we can see that there is lots of pressure over here. There's lots of buying pressure. Now, this is an indication that we may not actually reach that low. We may not get to that range low. We may actually get something that looks like this for more upward action. So let's see how I was able to enter this trade then. Well, what I did is I waited, I was patient, and I waited, and I can see on market cipher that we are beginning to see what looks like a bullish divergence. What is a bullish divergence? Well, price is going down, momentum is going up. What does it do? What does it tell us? Well, bullish divergence tells us that there is about to be a change in direction. And that's exactly how I was able to enter that trade. Of course, you could have also looked in here to see if there was a change in market structure. So that was a trade I entered, and I'm actually currently in that trade still. And that trade, if I show you, the fruits of that trade was a trade that I entered yesterday, and I quickly de-risked that trade. So as you can see, we can see that entry was at 42,663. No, entry was at 41,847. Okay, and as of when I took this shot, it was at 42,663. Okay, so it went up 95%, and I'm still currently in that trade. I've de-risked that trade. What do I mean? I've moved my stop loss to entry. So right now I am playing with house money. So that's, those are the two trades that we entered, and one of them I am still currently in. Now let's dive into the charts to see what Bitcoin has in store for us this week. What's currently going on with the Bitcoin? All right, let's get rid of this. We're going to get rid of this. We're going to get rid of this internal range. Well, we can leave that for now, but we're surely going to get rid of that. We're going to get rid of all of this. Well, we've mitigated these zones, so we're going to get rid of that as well. All right, and we can just leave that in there. Actually, no, we'll get rid of that as well. Okay, just to clear up the chart, so that we know exactly what we are looking at. So what's going on with Bitcoin at the moment, and what do we expect to happen? Well, we can see that at the moment we are still in that range. We haven't broken out of the range yet. We've been accepted back into the internal range of the larger range, but we're still within that range. And above us, we have the 45-minute supply that's confluent with our POC. We have our 10-minute supply, which some would argue is unconfirmed, whether it was before or after this break-in structure. We have our 24-minute supply that's just above our range high. Now, this is a very interesting one because it sits just above our range high. Could price mark up, take out the range high, get some juice from the supply, and mark down to this range low? Is that what price is about to do? So that's what we have, above us. Also, bear in mind that on the 4 hour, we're looking to put in a retracement anytime soon. We've had a 4-hour break in the structure bearish, so we are looking to conventionally print a high before a low. All right, so these are what we have. This is what we have going on above us. Now, what's going on below us? Now, below us, it's very clear to see that we have obviously that range low. It's also very clear to see that we have a 4-hour demand. And this is clear institutional level, which led to the incision into our range to begin with. So we have a very strong demand that led to this pump up that brought us into this range that we've been playing around with for the past 40 days. Okay, we can see in terms of our liquidity that we have lots of stop losses over here that could easily be run through if we were to come further down. Okay, and as well as that, we can see that we have some inefficiencies over here that need to be filled. All right, so that's what we have below us. So where am I looking for my next trade? Well, for my next trade, it's very straightforward. I'm looking at a reaction at each and every one of these points. So I'm looking at, for my shorts, I'm looking at a reaction from this range, to ride that down at least to this range low. I'm also looking for a reaction, from this 10-minute block. Stop loss over there. I'm also looking for a reaction, from this 45-minute, supply. Okay, to drive that down. Now, these are all regions by where we can put in that first lower high. Okay, so we're looking at those regions for our reactions. Now, in terms of our bullish scenario, where am I looking for reactions? Well, in the bullish scenario, I'm looking for a reaction at this range low. This may happen first before, we get a reaction off the range high. So we're looking for a bullish reaction over there. We're also looking for a reaction from this 4-hour zone. This is a very strong, I can't emphasize this enough. This is a very strong 4-hour zone. So we're looking for a reaction from this 4-hour zone as well. Okay, so if I zoom out, just to give you an idea of where exactly I'm looking for my next trades, it will be for my shorts, 1, 2, 3, and for my longs, 1, 2. As I say, this is a very clear zone for which we had lots of institutional interest. So it's a very key place that price could bounce from. Which happens first? I'm not sure. Well, are we going to get a bounce off this range low first? I'm not sure. Are we going to get a bounce off this range high up here? I'm not sure. But as I always say, the trade setup is merely one piece of the puzzle. Okay, the more crucial component is understanding what your entry model is and understanding how you're going to enter this trade. So how are we going to enter this trade? Well, as we approach these levels, we're looking for clear market structure breaks. We're looking for clear market structure breaks, so something like that. As we approach this level, we're looking for a clear market structure break. Put that further down. As we approach the levels for our longs, we're looking for a clear market structure break. And we're looking for a clear market structure break. Okay? So, along with that clear market structure break, what is Market Cipher doing? So that's exactly what I'm looking for as we go into this week. So there you have it, wrapping up today's Monday's update. If you found this breakdown valuable, if you found this information useful, feel free to hit that subscribe button and hit that bell icon to stay up to date for the latest market trends.